Vitale, Vitale Wealth Management here with this week's grading investment market update. All data is gathered as of the week of May 4th, 2026. We hope you had a great week so far. Let's get into the week in review. The market was positive with all major U.S. indexes. NASDAQ once again led with gains of 1.12, followed by the S&P 0.92 and the Dow 0.55, all up. April capped off a strong rebound in equities. The S&P 500 surged 10.4% for the month, and NASDAQ was up 15.3%, beats the best month since 2020 for both indexes, so super solid growth. Upcoming economic releases, this will focus on labor market, consumer sentiment. The jobs opening and labor report came out yesterday, offered important insights on the labor market, and we saw a little uptick in the market as a result. On Friday, we're going to see the monthly jobs and unemployment report will be released. Now, one of the most closely watched indicators in the labor market strength. That same day, the preliminary consumer sentiment report will provide a timely look into consumer sentiment. Also, we've been getting a lot of earnings coming out this last week as well, so a lot of earnings, and you're going to see this. We're halfway complete. Most of the Mag 7 have reported. Results have come in broadly better than expected, prompting a sharp uptick in revision of profit outlooks. Analysts now expect the S&P 500 earnings to grow 27%, up significantly from 15% just a week ago. And they are. It's crazy. So we are seeing earnings. Everybody was worried about the AI growth, but the earnings are there. Within the mega cap tech market, a clear divide has emerged. Investors are rewarding companies where AI and cloud investments are driving tangible revenue growth, while penalizing those accelerating spending without a clear near-term return. Now, Fed Chair Jerome Powell delivered his last press conference as chair. He left interest rates unchanged, which we knew was going to happen. However, the decision saw dissent from 4 of 12 members, and usually high level of disagreement not seen since 1992. Highly growing divisions on the future path of rates. Kevin Warsh has been nominated as the next Fed chair, pending Senate confirmation. That is good news. We should start seeing rates come down. They've been way too high for too long, and it's been stagnating. Even we should see a lot better growth than we're seeing right now. We should see better in the housing market, but we haven't. There was trading activity in our contrarian choice portfolio last week with the following changes: sold Google and bought BSX. So every quarter we got to rebalance as needed. Talk about tech stocks in the news. Amazon, which is in the G33 and Core Select, delivered a strong beat with growing their AWS 28%, its fastest pace in over 3 years. Shares were up 2.73% for the week. Apple, which is owned in the G33 and the Core Select, also exceeded expectations, driven by solid iPhone demand and continued strength in China. The company recently announced a CEO transition from Tim Cook to John Ternus in September of this year. Shares were up 4.68% for the week. How about Meta, owned in the G33 again and Core Select, reported better than expected earnings, but reported their first user decline and raised CapEx spending estimates by another $10 billion, now 125 to 145 billion, sending shares 10.3% lower. Microsoft, which is in the G50, the G33, and the Core Select, posted strong results led by Azure growth, but softer guidance on revenue and margins alongside higher CapEx weight on sentiment. Shares fell 2.44% for the week. And we have more news. Google, which is in the G50, G33, Core Select, stood out as the top performer. Revenues up 22%. Google Cloud surging 63%. Backlog nearly doubling. Shares were up 9.96% for the week. So again, the earnings, we always talk about the market is driven by earnings, and the earnings have been phenomenal. Everybody says, well, how is this happening? All these earnings, the market is so soft. Everything, the gas prices are through the roof. This is not good. I think we're going to start to see that hopefully come down. We've been waiting for that. But energy is also in a lot of the portfolios. So the profits, we're seeing Chevron, ExxonMobil, Shell are in the portfolios, and they're getting solid earnings as well. But hopefully we're going to see that change. Hopefully we're also going to see the interest rates start to come down, and that should spur a lot of things as well. We are looking forward to that. We are getting new revisions on growth. We're seeing that, we were talking about, I think the market's going to do 5 to 10% positive this year. It could even exceed that. The first 4 months of the year have been more positive, and when we have the first 4 months of the year positive, the end of the last 8 months should be a lot better. In history, that's what history has shown us, so we'll see if that's going to happen again. That's it for this week. We want to thank you so much for being part of the Vitale Wealth family. We also want to give a big shout out to all mothers out there and wishing you a very happy and blessed Mother's Day. Thank you so much for our mothers. And that's it for this week. We want to say God bless you. We look forward to seeing you next week, and feel free to give us a call at 855-756-5700. Visit us at vitalewealth.com. God bless you.